Hi guys, welcome to Shal Studies. Today we'll be going for the continuation part of Introduction to Accounting. So those who have not seen the first part, please do watch the first video and come back. Okay, we'll go to the video. Today we'll be discussing about the main 5 elements of financial statement. So the 5 terms are asset, expense, liability, equity and revenue. Before going to these terms in detail, I just want to make you clear that these are called the elements of financial statement because these terms or these items will be seen in the financial statements. Okay, so just understand that asset, liability and equity will be shown in the balance sheet, and expense and revenue will be shown in the profit and loss account. Okay, we'll go for the meaning and in-depth details of these terms. An asset is a resource controlled by an entity as a result of past events and from which future economic benefits are expected to flow to the entity. When we say an asset, we always think of something we hold or something we have, something we purchased, and all, right? If I say an example, a machinery, land and building, etc. So, in the modern definition, it says that an asset is a resource that is controlled by an entity, that is not actually owned by an entity, but it is controlled by an entity. Why it is called it is controlled? Because it's not necessary that we need to own it. If the asset is available in lease, we can use that way also. So it can be either owned or leased by the entity. Okay, so it is a result of the past event. That means in the past we have bought it or we have taken that in lease. Okay, now we have to understand from which future economic benefits are expected. That means from these asset or from these resources we are going to get economic benefits. Economic benefits means from machinery we are making a product and we are expecting some money from it, right? For example, we are selling that product in the market and we will be getting a sales amount. From that, we can actually make a profit. So, the profit is the economic benefit that we get from a machinery. In the same way, every asset is expected to make some economic benefit in the future. So I hope you understood the meaning. An asset is a resource that is controlled. It can be either owned or leased by an entity as a result of past event. That means in the past we have bought it or taken in lease, and from which future economic benefits are expected. That means we are going to get some economic benefit from those assets in the future. Okay, so that is about asset. And now we'll go for expense. An expense is the cost of operations that a company incurs to generate revenue and from which no further benefit is expected. Okay, so this is the cost of operation. There will be a lot of operations happening in a business, right? For these operations or activities, we are using something. For example, electricity to produce an item. So we are using it and it is done there. We are not getting any future benefit from it. Before we said in the case of an asset, we are purchasing something and we are expecting a future economic benefit from it. But here, in the case of expense, we are not expecting a future benefit from it. That means we are already using it. Okay, we are using it and it's done. In the case of labors, we are making them to do the work or they are working for us and it's done. We are giving the salaries, it's done. We are not expecting them to work again for the salary that we paid today, right? In the future they won't work for the salary paid today. So that is what we called an expense. Next we'll go for liability, a present obligation of the entity to transfer an economic resource as a result of past event. So here we are in an obligation. Okay, so if I say an example, we are taking a loan from a bank. Okay, so while we are taking the loan, we are getting cash, but we are in an obligation to pay this to the bank in the future, right? So we have an obligation to do that thing. That is a liability. So we can say it is a claim of the outsiders on total assets of the company. So that means bank is an outsider to us, right? So that bank is having a claim on our assets. Our assets means the company's assets. So that is a liability. Now we'll go for equity. It is the residual interest in the total assets of the entity after deducting all its liabilities. It is the claim of owners in the total asset. So, when I say the term equity, you have to think of capital. So, what is a capital? Capital is something that the owner put into the business. That means when we are starting a business, we need to put an amount into it, right? We cannot simply start a business. So, a capital is said when you are a single owner, but in case of a company, we say equity. You'll be familiar with the word share, right? What is a share? In a company, there will be a number of owners or a number of shareholders. That means a number of owners are putting their money into the business, and that's why they are called the owners or the shareholders. So their ownership is determined on the basis of these shares, these parts, or the units, they call it as shares. Okay, so we are the owners of the business. So the assets are ours, right? No, the assets are not ours. We have to deduct the liabilities from the assets. And what is rest is ours. Clear? The last term is revenue. It is the gross inflow of cash, receivables, or other consideration arising in the course of the ordinary activities of business, such as sale of goods, rendering of services, etc. Okay, revenue in simple terms, we can say that it is something related with the profit of a business. Profit is something different from revenue. Okay, to understand this, just think that if you're selling a book for rupees 40, 40 is the revenue you get. Okay, you are not deducting any expenses from that. 40 is the revenue, that is the total income you get. You are selling something for this much amount, so that much amount is your revenue. Okay, you may not get it in cash all the time. It may be cash, receivables, or other consideration, anything, any benefit we get. Okay, that is what we called revenue. That's all for today, so we'll be continuing in the next video. So thank you.